The stock market had a brutal day yesterday. It was a day that the NASDAQ dropped more than 3%. That's huge. And certain sectors, semiconductors, had their worst day since 2020. 2020 was a year when we had this pandemic, huge pandemic. It shut the world down. And that was the last time the semiconductor industry had a day like that. So we're heading into an open that my best guess, we're like 22 minutes from the stock market opening. It's probably going to open to the downside. We'll take a look at a few stocks that are interesting out there. I already have one request on the comments from Mr. Cotton. He wants to look at CEG, which is, I think, in the nuclear space. I've looked into this a few times. Let's take a look again. It'd be interesting to take a look at nuclear. And a couple other stocks that I wanted to look at was C3.ai is going to be the stock that is going to be in the contest with Stonks later today. So I thought we could take a look at that. I want to look at Qualcomm. I've already have been looking at this stock. I'll tell you the full story of this stock when we get there, but I'm ready to go on that one. I'm probably going to start with Qualcomm because I've done a lot of homework on that one, and I'm ready to share that with you guys. Before we go there, just if you guys want to look at a particular stock, please put it in the chat. I'll take a look at it, provide a high level review. I'll go as deep as it makes sense. If it's a stock that is really interesting, I'll dive into it. Just keep in mind, I'm just an investor, and I like share my experience on online. And I'm not recommending you buy, hold, or sell any of the stocks that I'm going to cover. It's not financial advice. And please make your decisions really carefully. As we look at the stock market, crypto, BTC, and Ethereum are up. That's good. Last month, my crypto had a very bad month, and my stocks had a decent month, a good month. But my crypto really lost value. Now, 1 month isn't a big deal. I'll cite that. Now, today, crypto being up, that's good. Also, my bond portfolio is up really nice. Bonds are a good hedge against the stock market, a good alternative asset against the stock market. So I'm really glad that, I've been investing in bonds for a few years, ever since bonds or interest rates really went up and the yields started to really climb. It became a good idea. And I'm glad that I've got a really nice portfolio of bonds, because my bonds really rose yesterday. And it looks like they're going to rise today. So I'm glad I'm invested in bonds there. A couple other things to note is oil keeps dropping. Now, oil's not going to drop forever. At some point, oil prices will pick up. I don't know when, but they'll pick up at some point. And that tends to happen is oil will sell off. There'll be some type of supply shock or news story that just begins to have the stock or the oil price rally. So we'll see what happens there. All right. So yesterday, some of the big news yesterday was NVIDIA was the biggest news, right? They lost over $300 billion of market cap. Just to put your head around that, like 300 billion alone is a pretty significant cap company, right? You're talking about like a CRM, a Salesforce. You're talking about that size of a company, and they lost that in one day. So it was a real shocker. We'll see what happens today. It's supposed to be dropping even further. All right. So let's get into Qualcomm. So as you guys may know, Qualcomm is a semiconductor company, and I've been invested in semiconductor in some way for a couple of decades. And Qualcomm has been in my universe for quite a long time. They're down to San Diego. I'm up in Orange County here in California. And they are a company that really knows communications, and they know semiconductors for communications. So when the whole, even before smartphones, when you had mobile phones, right? Qualcomm was a big player. And then we got to smartphones, big player. Communications equipment, Internet of Things, 5G, Qualcomm. And now they're competing for the PC market against Intel and AMD. And I think Intel is really vulnerable. I don't think I need to convince anybody of that. So it's a pretty good idea. Now, Qualcomm, and I'm going to show you a little more information, has been a stock that, man, I've made good money on it. I made good money on Broadcom, Qualcomm, and recently, and you saw that Qualcomm really ran up, and then it around June 18th was its peak. It went up 66%, really nice, and then it's come back down 28%. So I bought in pretty much this whole zone, and I dollar cost average my buy mostly into stocks, right? I'm not smart enough to know, okay, this is the point to buy or this is the point to buy. I just know that, hey, this thing is underappreciated, discounted, and I'm going to buy. I'll show you the data behind my buys and my total gain. Well, now I'm seeing that, is Qualcomm potentially a buy now because they're getting sold off with the rest of the sector. Like Nvidia's, getting destroyed, but Qualcomm is kind of a different animal. It's a $181 billion market cap, and Nvidia lost 300 billion just in one day. So you could see that. Well, this isn't a big, massive cap. It's a pretty low cap compared to Nvidia. So I'm going to take a closer look at that. So again, 181 billion market cap, pays a 2% dividend. Not bad. Analysts think it's discounted by 25% and it's a buy. Okay. All right. Sounds good. Year to date, doing 15%, 1 year up 40%. Sounds good. Now, as we look at their financials, this is where it gets really interesting, right? Revenue. Now, they had hit kind of a wall, and so has Apple, right? Apple iPhones, they're not growing that business. Apple is not growing, but you got to zoom in on the quarterly so you can see the beginning of a trend. Look at that number, 11% growth. And we're talking about a company that's substantial size, 37 billion in revenue. So that's where it's like, it's really interesting. It's like, I started to see this and I'm like, okay, I'm going to start buying this stock. I bought it. I made money. I'm going to show you how much money I made in a minute. And now it's even accelerating its growth. So that looks good. So revenue looks really good. I looked at the balance sheet. They have about as much cash as they do debt. So consider that they have zero debt. So the debt to EBITDA ratio, I like a healthy balance sheet. Looks good. Cash flow. This looks really good. It keeps looking good. So when we look at cash flow, we want to see free cash flow. And free cash flow, and I'm looking at the quarterly, which is wrong. I should look at the annual, look at trailing 12 months. So when we look at cash flow, it's always been cash flow positive from a free cash flow perspective. But look at this number, 12.5 billion in the trailing 12 months. So you have growth in revenues, growth in free cash flow. I'm liking what I'm seeing. Just substantial gains too. So I'm really liking the fundamentals of Qualcomm, their financial statements. They're being sold off with the rest of the space. So maybe the market, which tends to move very irrationally at times and kind of just sells things off because it's like, oh, it's semiconductor, sell it off. Yesterday, it sold off by 6.88%. So let me take a look at my intrinsic value calculation of Qualcomm, which I've updated. And when we look at Qualcomm, and I'll just go ahead and expand this since I've already showed you the fundamentals. The free cash flow that I expect for this company is actually going to be better than this number, probably, but I'm just going to be conservative. I'm going to take last year's plus 10% and establish free cash flow. I'm going to use a growth rate of 6%. Again, it could be a little higher, but I'm going to be conservative, and then growth rate in the future of 4% beyond year 4. I'm going to go with a discount rate of 8.5. Again, conservative. I could go 8, but I'll go 8.5. And it gives me a net present value of all those cash flows is $237 billion. And the cash on the balance sheet is 13 billion. Debt is 14.5 billion. I see that I need to update one field. You know it's live when I'm making corrections, huh? So it's $181 billion of market cap. Shares outstanding have been going down. Very good. They're buying back shares. So it provides a 30% discount. If I look at free cash flows, I believe that stock's discounted by 30%. And I happen to think that Qualcomm's a quality business. I've known of them for 25 years, 30 plus years, because they, the San Diego Chargers are now the Los Angeles Chargers. They They played at Qualcomm Stadium. All you football fans out there that might, jog a memory. And they've been one of the premier companies in San Diego for a long time. I've known of them for a long time. So it's a quality business to me, and a 30% discount looks pretty good. Earnings per share is expected to be at $10.28 per share this year, a PE of 18. I could go 24. I'll be conservative. Growth rate is 6. I can go 8 or 10, go with 6. And I get a per share value based on earnings per share of $196 per share compared to the current stock price, 20%. And make sure that I've got an accurate stock price. Yeah. All right, cool. So when we look at Qualcomm from a discount perspective, I believe it's discounted by 27%, and it becomes really interesting to me. Let me show you what I was able to do with this stock in the last 12 months, and I had a nice gain. So I saw that Qualcomm, so I was in Broadcom last year, and I bought at the right times. I made a really, really nice return, and I was looking at Qualcomm saying, okay, this thing hasn't taken off, and semiconductors taken off. So I started buying in the January timeframe. Here are all my, dollar cost average buys. I got paid a few little dividends there, but here are all the buys that I made. And then I became really uncomfortable with semiconductor. And if you follow me, you know that I'm shorting NVIDIA. I'm also shorting Broadcom, by the way. And that's really working out quite well. And at the same time, I thought in June, I'm going to go ahead and sell my position in Qualcomm. And my total investment was $21,841, but the proceeds altogether were $26,895. So I had a $5,000 gain. And when you look at it, it's not perfect. It's less than 6 months, and I was able to achieve a return of 23%. But if I annualize it, it's closer to 69% because I only was in the stock for 4 or 5 months, and then I got out. And I'm a long-term investor, and I like tracking companies. And I know companies. It's kind of like I know that company, and when it really drops, I'm able to go. I'm able to take advantage of it because there's a level of awareness, level of comfort in a company, and Qualcomm fits that category. So I'm really glad that I got in and I got out. So now, is it time to go back in? And the answer for me is yes, absolutely, because the market is irrational. Right now, the market it's like a little bit like a drunken sailor, frankly. When you look at some of these swings, right? This company, I just showed you the revenue. The revenue is expanding. Why is it dropping? Okay, now it's dropping because the rest of the space is overpriced. I wouldn't argue with that. I would not argue with our friends at NVIDIA who are sitting. They were a $3.3 trillion company, and now they're a $2.65 trillion company. This is what happens when you go parabolic. It just goes insane, and you're not tied to any valuation. So anything goes. It can go up or down. Who knows? But more recently, it's really dropped, and it's scaring investors away from semiconductor. Well, as it relates to Qualcomm, that's somebody else's problem, and it's my opportunity. I'm going to start buying into Qualcomm. It looks like the market's going to give me another discount today. I average in my purchases. I just think that, hey, if I can accumulate $50,000 of Qualcomm over the course of the next 6 to 12 months, I'm good with that. Pays a dividend. The dividend keeps getting better as the price drops. And that is a stock that I was sitting on the couch last night with my wife watching. I don't know what we were watching this movie. It was called the Aloha. And it was a good movie. Had the right balance, right? A lot of good stuff for my wife, and I thought it was kind of funny. And I thought Qualcomm, and I noted it, and that was one of the first things I started to look at today. So I'm good to go on Qualcomm. All right, got some questions or some comments. Thanks so much, everybody. If you want to see a stock, please put it in the comments. And looks like I'm getting a few new followers. Thank you, appreciate it. Which stock are you looking to add in this correction? Well, I just talked about Qualcomm. Now, I did a separate video, and you can find it on my YouTube channel, but it's a video. I could probably open the spreadsheet. Give me 1 minute here so that I don't drag you through a bunch of file openings. But since you asked the question, let me answer your question by providing a spreadsheet that I used with a couple of videos I created. And we will go over stocks that I think are really good buys for me. And we'll go from there. All right. So this is kind of small. So if you can read this, you could become a pilot. Just go to the Air Force or the Navy and apply. All right. So it's still kind of small. I apologize. I'll try to zoom in as we get closer. But what this spreadsheet basically shows is anything that's in green did really well in the month of August. So like Starbucks really went up. They had that new CEO announced. They went up 21%. Chegg really went down. It went down 37%. All the stocks that I'm buying, and that hasn't changed, are in green. I sold CBS yesterday, and but I'm buying Chegg. I'm nibbling. It's not like I'm diving in head first. It's a stock that I think as the AI space begins to unwind. And let me make this a little bigger for you guys. I'm going to make this bigger and make myself smaller. Oh, I screwed it up. I'm having a technical difficult morning. So let me make a few columns smaller, and we'll go from there. So you guys know what industry these guys are in. This is desirability. We don't need to see that. I'll just hide these for now. All right, we're getting somewhere. Okay, so that's nice and big now. All right, so Chegg. So Chegg is being threatened by AI, but I understand AI. I think AI is really interesting. It's just going to take like 10 years to really get anywhere with this new paradigm. And between now and then, Chegg has enough time to really reinvent their business and actually become an AI company. I think their revenues have been coming down, but if they start to grow, this is going to be a multi-bagger for me. And I've done that with other stocks that have been on this, declining trend. And then once they start growing, boom, it really provides a good return. One of them is Zim. Zim was on a declining chart. Let me show some graphs to you. So I'm going to show Chegg, and then I'm going to show Zim. So Chegg basically was left for dead. It's like, oh, now that COVID's over, you are completely worthless. You're like garage sale item. Nobody wants it, and which is ridiculous, right? They still have really high free cash flow. They still have like profitability, but if they could just start growing just a tiny bit, the stock's just going to rally. And if you look at Chegg in the quarterly, here's their income statement. And when I talk about stocks, you hear me talk about revenue. Revenue is really the metric to me that says so many things, that the company's growing, it's getting bigger, it's getting larger, and more customers and so forth. And it's been red if we look at the quarterly. But this guy, the compares are going to get easier. And I think they're going to start growing maybe in 2-3 quarters. And I want to be around when that happens, because I think it's going to follow what Zim did. Zim had a similar scenario where the supply chain constraints that we had, if you recall, we had like really tight supply chains. They were like causing the shipping rates to go through the roof, and Zim was making money like you wouldn't believe. They had dividends that were like 25% of the share price, just ridiculous amounts of cash. They bought new ships. I mean, they were like rolling. And then the market said, oh, shipping rates are dropping. You guys are worthless. Okay. Interesting. You sold it off by 92%. But I said, they're going to start growing. Shipping rates look better. So I started buying. And I'm sitting on a real nice gain of Zim. I think it's still going to go up. My exit price is $30 a share. At that point, it'll be a 3-bagger, and I'm good. But this is the kind of action I'm looking for out of Chegg. And I've done that with Zim. I continue to buy shares of Zim because I think the market doesn't always know how to treat small caps. It's like, oh my God, it's not Apple. Not everybody's in it. Oh, okay. I'm nervous. And it sells off small caps. And some of these small caps like Zim's producing a lot of free cash. They're producing a nice dividend. So I'm good to go. I'm a buyer of Pfizer. I think Pfizer is going to rock. I don't need to convince anybody that Alphabet's like one of the best companies on the planet. And I continue to buy, especially since the share price has been dropping. I bought shares yesterday. I bought shares yesterday. I bought shares yesterday. I bought shares yesterday. Something in the middle, something that went up 4% during the month of August. I'm buying shares of Cisco, legendary company that is a good company, discounted for me, so I'll buy it. I don't have a big position of that. I am buying Amazon as fast as I can. I am buying Amazon. I've got sold puts on it. If the stock drops, I'm going to buy it. I want to build $100,000 position in Amazon as soon as I can. I owned Amazon. I made a lot of money on it in 2023, and I sold it. That's probably my biggest regret that I've had in the last 12 months is why did I sell Amazon? And I apologize for all those that watch my channel. I know you guys have heard me a couple of times whine about that. I apologize. DocuSign. I'm buying some more DocuSign. Live Nation. New position. I'm buying into Live Nation. They are the monopoly. I didn't say that. The government did. In ticket sales for concerts. And I think they're a terrific company. Buying more Meta. It's my biggest position. I bought more Meta yesterday. I bought more Live Nation yesterday. I bought more. I bought a lot more of Amazon. That was my biggest buy, was Amazon. PayPal, it's beginning to work. It's beginning to work. A lot of value in PayPal. Allstate, that's standing up tall right now. And I think I did not buy any more yesterday because it was up. Nike, I bought more Nike. United Therapeutics is a terrific company. I bought more yesterday and I bought more yesterday. So I'm holding on Starbucks because the stock just went up so fast. So I was able to answer your question. Thanks for asking, because I was able to share some more information that I had. I appreciate you asking. All right. So those are the stocks I'm buying in correction. Mr. Cotton want to look at CEG. So nuclear power, huh? So CEG, Constellation Energy. Okay, so Constellation Energy Corporation generates, sells electricity in the United States. It operates 5 segments. Okay. So these guys do a combination of power generation, nuclear, wind, solar, natural gas, hydroelectric. Now, utilities became really exciting in 2024 because data centers are supposed to require a lot of power. But you guys who watch my channel and who watch my streams, you know, I don't like utilities. I'm going to show you their financials, and they don't generate free cash flow. You know, they have to literally rebuy their businesses every 3 years. So I'm not a utility guy. I don't invest in them, and we'll see. This one's different. I don't think it's going to be different, but let's take a look. When we look at the 5-year, you can see, oh man, data centers are going to need power. Now, I would say that if data centers were, I'm in California, so I know about power outages. California, we've had a lot of power issues over the last 20 years, but I can't think of the last time we had, you know, a brownout, blackout, and our grid's been pretty stable. So, and I haven't seen any reporting where, oh no, this region is dealing with a lack of power because these data centers are consuming too much power. So I'm like, well, where's the demand? I'm not hearing about it. Well, let's take a look at the revenue. Remember, revenue tells you, are they selling more? Are they raising their prices? Are they profitable? No, revenue is going down. Well, if this whole data center thing is going to be drawing more power, why isn't that green? Okay, that's interesting, right? So we're not seeing more power, huh? Interesting. Okay, so they're losing money, bad, and bad. And if right now all these data centers with all this AI build out is supposed to be drawing a bunch of power, where is the revenue growth? All right. So that's a big problem. Now let's talk a little free cash, because you know I love free cash. Free cash is where it's at for me. The most valuable companies on the stock market all generate very high free cash flow, and this one drives cash flow down. They burn cash. That's what utilities do. They make big piles of cash and they put gasoline on it and set it on fire. That's what utilities do. And that's why I don't like them. And if you look at the utility space, I'm going to show you Um, so here's utilities from a sector, very high level, right? And I clicked a little too fast there, but I think I could show it to you this way. Here's utilities, the 5-year, okay? Over 5 years, depending on where you go, if you go into renewables, you will only lose 3%. What? I'm going to give you my capital and I'm going to lose 3% over. Yes. 2%. Now you've seen the independents really go off the charts because they're overpriced right now. But where I want you to focus on is the rate of return here is terrible. When you look at technology, it's awesome. When you look at healthcare, it's very, very good. So when you look at utilities, what's your expectation over the next 5 years? This is better here. Okay. So healthcare over the next 5 years, 176% return. Yeah, I'm good with that. I'm good with that. Technology, 500% return. Yeah, I'm more than good with that. Thank you. May I have another? Consumer discretionary, very high. But utilities, 21% return. And that's with all this hype that's going on. So utilities to me are never invested in them, never will invest in them because of their capital outlay. And you think about, they run power plants, right? These power plants cost a lot of money to run. They're highly regulated, all kinds of stuff going on. They have to hire good employees, qualified employees, electricians, and all that good stuff. They pay them good amounts. Great. But it's not a Meta. When you look at Meta, you look at their free cash flow, their profitability, it's off the charts. And that's why they're worth well over $1 trillion. And that's why they return such a great return to investors. I get to invest in, my choices are among thousands of stocks. There's no rule that says you must buy utility. So I'm not buying a utility. I'm buying the stocks that I think are going to give me the best return. Like Qualcomm. Hey, man, you probably give me a good return. Right now, I'm not in any semiconductor stocks. I'm shorting 2 semiconductor stocks. I'm shorting NVIDIA and Broadcom. And that's that. So thanks for the question. And my opinion is just my opinion. If you really like utilities, I would say, think for yourself, make your own investments. But I'm going to give you my opinion as I see it. And hopefully you found it interesting. All right. We're up to 25 viewers. We got some good chatter going on. Thank you for the suggestions on stocks. Any other stock you guys want to look at, please put it in the chat because I'm going to move forward and I'm going to let's look at NVIDIA. To me right now, NVIDIA is like, I'm in California, so on the freeway, you drive and there's an accident. You shouldn't look, Lou. You shouldn't look over there. But it's kind of like if you saw a Ferrari get in an accident with a really old clunker, let's say a pickup truck, you're like, oh, that Ferrari got smashed. I just can't resist. I got to look over there. Got to look over there and say, whoa, man, NVIDIA, you're a Ferrari and you're getting freaking wrecked. Because yesterday it was down close to 10. Now it's down 3. Holy smokes, man. That they were at their height, they were a $3.3 trillion company. They were threatening to be the most valuable company on the stock exchange. It's like, geez, incredible. Their drop of 23% from the high. So 23% and dropping. Now, the other thing I want to point out is, now I'm not a technical trader. I think if is Trader Pratt on here or somebody else, there's some technical traders out there that are awesome. But here is my analysis: is this high is the all-time high, and we would move over time. This high was not as high. It's actually dropped by like 0.5%, and then when we move to the next high, it's down 3.64%. My point being is the highs are not as high, and that's a bearish signal. That means that investors start selling when the stock price starts rallying. Now we're in this free fall, and it's like, whoa, man, what's going to happen? It's like seeing that Ferrari wrecked on the side of the road, man. It's worth a lot of money, and you're like, man, just one fender on that Ferrari is worth the value of the car that I'm driving. Holy smokes. So where's this stock going to go, man? I'd love to see some chatter. If you could put in the chat, where do you think the stock price is going to be at the end of this year, 2024? Where's the stock price going to be? Right now, it's at $105.69. Tell me what you think. And maybe toward the end of this live stream, I'll tell you where I think the stock's going to be. at the end of the year. NVIDIA is a short position for me. I can't, let's see if I could show a little bit of my short. So what's the stock price? 106.10. So right now, my short position, I'm up 6%. And if I can, actually, I'm up 8%, excuse me. If that thing gets to 30% in either direction, I'm out. On principle, I saw what I was seeing in NVIDIA. I'm like, this does not end well for companies. When you go parabolic, it always ends with the investors get just completely tortured. The stock drops. It drops below its intrinsic value because the momentum to the downside is so powerful, right? Think of all the automated sell orders, stop losses. You think about these big hedge funds that are sitting there at the month end answering, because these big hedge funds, right? They manage the money for big, wealthy people, and they call and they're like, "Hey, dude, what's going on with NVIDIA? Are you going to get out of that stock? It's a freaking falling knife. What's going on?" And they want to get out. So, I think if you get this stock moving like super microcomputer, right? This stock, does this chart look familiar? It went parabolic and now it's falling knife, a total falling knife. I shorted super micro. I made a very good return. I made a video and I said I made a 32% return in 6 weeks or so, but it was actually, my math was wrong. It's hard to do your calculations on short positions because you're not buying the stock. You're basically borrowing the shares and selling them. And then you come back and you buy the shares. And then, so the math is a little funky, but once I got it right, it was a 52% return over 6 weeks on super micro. So it was a nice move. And this thing is just getting crushed. And it doesn't end well, man. Stocks that go parabolic, they tend to do this. And this one's getting crushed. Now our friends are NVIDIA. The US federal government has sent subpoenas and it's like, hey, we think you're a monopoly when it comes to GPUs. We think that you're acting in a way that's illegal in some of your behavior. I'm not an attorney. I don't claim to know that stuff really well. I could just tell you it's more bad news. And NVIDIA was priced for perfection ×3. And as you see, Blackwell is being delayed. Okay, that's bad news. The US government is going to call the CEO up to Capitol Hill and grill him like they grilled Zuckerberg, with Meta back when there was like some concerns around Facebook and all kinds of stuff. So it'll be super interesting to follow NVIDIA and see where it goes. Now, I would not be blown away if the stock went to 200 because it's untethered to valuations. I don't think it's going to. I think the market's scared right now. The market's selling off. My best guess is it's going to fall substantially. Let me look at some comments here. So Mr. Cotton, thank you for tuning in and for asking questions. I appreciate it. Doomy Trash. I should say Mr. Doomy Trash. 2 tickers. Hafnia and Orchard Island Capital. Hafnia. I'll take a look at those. Then Orchard Island Capital. Okay. And then, all right, cool. And then Naom talking, say 5 trillion, even more. Yeah, I saw one Reddit post that, NVIDIA is going to go up to 10 trillion. Oh my God. Yeah. NVIDIA at 40 by year's end. Man, we'll see. Man, I think people's heads will explode if it gets down to 40, but we'll see. I wouldn't short it. Markets can say irrational. Yeah. So let me talk about short positions and talk about, just some. So I'm 56. Okay. When I was 26 and I was investing, I think there's some like rules of thumb or wise words, sayings like real estate's always a good investment. Wrong. Sometimes real estate's a horrible investment. I'm a real estate investor, by the way. I've made a substantial gain in real estate. You should always buy and hold forever. And really, well, why did Warren Buffett just sell his stake in Paramount? Because he realized that the company is bad and he got out of the position. So yeah, have a long-term mindset, but continue to evaluate the investments you have and then sell them at the right time. Now I'm leading up to where I want to get to. Short selling's incredibly risky. Well, not really. Now, why do I say that? So I get that markets can stay irrational longer than you can stay liquid. I agree. Now, if I took 100% of my portfolio and put it on a short position of NVIDIA, I would be chain smoking cigarettes 24 hours a day. I'd be a wreck. But I'm 56, man. There's a part of my portfolio where, hey, I want to dance with a risky move that's obvious to me. Like, to me, NVIDIA being overpriced is kind of an obvious thing. It's pretty obvious. So I took a small amount of capital, total of $9,000. And if it would go completely wrong, maybe I lose $2,700 because I had a limit. If I lose 30%, I'm out. Just remove emotion from it. You're out. If you gain 30%, I'm out, because for all I know, it gets to 31% and it rallies. Having said that, it's not very risky. When you put it into my portfolio, let's just round up. A $3,000 loss is non-material for my portfolio. It's a non-material. I lost 16 grand on crypto last month. Now, do I like losing 16 grand? No. Did it drive me into a loss for the month? No. My stocks did better than that. My dividends, also added to the pile, and I'm good to go. Is crypto risky? Yeah, absolutely. I would say that it's riskier for me to invest in BTC and Ethereum than would be in these shorts that I've got. So first off is I can control risk by controlling the amount I'm putting at risk. So that's one way to control it. There was also a saying that is incorrect, is it's expensive to buy on margin. You guys may have heard that. And I went into my short positions thinking that, okay, I'm going to have to pay an interest rate on margin. And my broker was like, that's a common misconception. If you have the cash, you're basically borrowing from yourself. So I'm paying no interest on my short positions. Now I do have to pay dividends. So if the company I'm shorting pays a dividend, yours truly pays a dividend on the shares that I borrowed. That makes sense and that's fair. So there's two things there is risk. Yes, you can control risk, right? And if, just to keep numbers simple, let's say you had $100,000 portfolio, I would not short stocks with 80% of that portfolio. But if you're young and feel like, you have something, you have some information you want to act on, taking 5%, 10% of that portfolio, you're in that zone where if something goes completely wrong, you're not that hurt. You're not that damaged. Now, I learned a lot by shorting these positions. I made on CrowdStrike in 10 days. I forgot how much, like 42% return, because I thought CrowdStrike was overpriced, thought they were priced for perfection. When I look at their fundamentals, it just doesn't add up. And then the universe said, now that you shorted CrowdStrike, they're going to cause the biggest outage in the history of computing. And boom, the stock got crushed. It's trying to rebuild again, but I don't know where it's at today. So I, made money on that. Super microcomputer was an obvious, situation. Made money on that. I'm making money right now on NVIDIA. Knock on wood. I'm knocking on wood. I'm making money on Broadcom. I've also shorted a couple of other companies that are around that data center. One of them is an independent power company. Remember, I was bad mouthing utility space. Yeah, I've shorted a utility company, and I'm in the green. And I've shorted a data center, call it peripheral component company that's way overpriced, doing well. And that one dropped more than 10% yesterday. And I'm also shorting Apple. Yep. I think Apple over the next couple of years is going to have a reckoning. It's a really high priced company that's not growing, that has no new big ideas. When their rivals like Microsoft has AI as a big idea, they have their cloud business that's booming and growing. Alphabet, Google, they've got like 4 or 5 ideas that are working, new ideas. Amazon, new ideas. Meta AI, new ideas. Apple, no new ideas. We're going to change the phone to different colors. We're going to create a phone that can run AI. Really, your competitor, Samsung, is already out with a phone that has an AI chip. Huawei is coming out with a phone with an AI chip. So just Apple is slow, and God, man, at some point that's going to count. All right. So, okay, cool. So I think I'm up to speed on all these comments. Thanks for the comments, everybody. Let's take a look at Hafnia. So Hafnia Limited. Sorry about clearing my throat. It's early. I apologize. So Hafnia Limited owns and operates oil product tankers in Bermuda. It operates through Long Range 1. So these guys are a shipping company, and they move oil from one part of the world to another. Okay, so this is a little bit like Zim. I owned another company called Panel, and I did really well with it. Now, oil prices are down, but that doesn't mean that these guys get paid less. If you're moving oil, you pay these guys what you need to pay them to move the oil. That's interesting that they're down 2%. And it's HAF. So you see oil prices go up. Now, these guys, I guess with lower oil prices, the expectation is there's going to be less volume that's moved around. So that is rational. It's like, okay, that makes sense. I think it's a pretty good idea. Let's take a look at their financials. Look at that growth. Wow. Incredible. Very good growth. Let's look at the quarterly. Quarterly solid. Okay. And balance sheet, they got cash of 166 million. Total debt of 1.135 billion. I'm going to look at EBITDA, and I want it to be less than 3 times net debt. Yeah, so they're making almost as much EBITDA as they have in debt. So it's 1, right? In 1 year, they can pay off debt if they really focused on using their EBITDA to pay off debt. They don't have to, but it's a good balance sheet. This is basically the conclusion there. When we look at free cash flow, they're looked at the wrong line. 1 second. So nice cash flow. Look at that growth. Very nice. So this is a good idea. This is a very good idea. So this thing is valued. You could value this company upwards of like 6-7 billion quite easily. The thing about shipping companies, and I've done business, or I bought shares of Panel. Panel moves like aggregate material, like gravel and cements and all kinds of stuff like that. Look at this chart. Isn't that a pretty chart for a small, tiny company? Look at the market cap. Market cap 307 million. So I bought these guys like around here, and I averaged my buy. And I got out of this position recently, and very happy camper. Very happy camper. And I put right now in this space, I'm just in Zim. But you know, it could really work, and nobody knows about this company. They're tiny. They move. They're similar to these guys, right? Now these guys don't. That's a pretty good chart too. And look at that. That's a good chart. So if you buy at the right times, this can really work. That's my conclusion. It's a good idea. So good luck with it. All right. Next one you wanted to look at is Orchard Island Capital. Orchard Island Capital. Do you have a symbol for me on that? So Orchard Island Capital. Did I get that right? Yeah, Orchid. Man, I'm like, I couldn't get my PC to work for the live stream. Not reading right. What else is going to go wrong today? All right. Orchid Island. They do specialty finance, invest in residential mortgage-backed securities. Okay, yeah. So, man, the mortgage business is exploding right now because interest rates are dropping so fast. The volumes have gone up 94%. So these guys, the revenue has been dropping, but I just made that statement that mortgage application volumes are through the roof right now. Okay, so we got interest, dividend, net interest. So they have net interest income, which is the net between what you lent at the rates minus what your cost of capital is. That's your net interest margin. Okay, then they have fees and other stuff. So revenue is minus 21. So that's interesting. Okay, this is concerning. I'd have to understand what's going on. Why is revenue negative? I'd have to look at that. It's showing free cash flows 59 million, but I'd have to get into the nooks and cranny of their financials, and I'd want to look at their investor page and go through it and scrub it. Also, the balance sheet is not going to follow that 3 times debt to EBITDA because these guys are going to carry a lot of debt because they use debt. Debt is kind of like their material that's their inventory, so to speak. And when you look at total debt, it's going to be a higher amount because they need that debt in order to finance loans. So their cash flow gains is okay. Yeah. Okay. So the cash flow is positive. So based on their cash flow, these guys would be probably priced. Let me look at one more thing before I start sharing how I see this company. So what are they doing today? They're up 6.67. They're going to have a losing year. So I can't price them on earnings per share. So this isn't wildly discounted. It's just, it's either fairly priced or probably priced a little bit at a premium. And there's a lot of homework to be done on this stock. It's not like an obvious, like, oh, this thing's going to do so well. It's kind of flat for the year, but mortgage volumes are really picking up and people are refinancing. They're refinancing to pull money out of their homes. There's just a lot of activity. So that might help these guys. I think right now, I don't know that this has already begun to rally. And I'm not seeing data that would tell us, hey, this thing's about to explode. Like I showed you Qualcomm, right? Like I showed you that, hey, this quarter, you see that expanding growth rate? That tells me they're really growing. If you can get ahead of that and be early, this might be a good idea. Right now, it's got a lot of hair on it. It's like, oh man, you got to do a lot of homework. The first one you came up with, this one, that's a pretty good idea. This one's pretty solid. I mean, you're dependent on the oil industry, but people need oil. The oil price does have a factor on consumption, but they're usually moving oil from regions that produce oil to regions that need the oil. And those regions need the oil. It's like, hey, like the island of the Philippines. I don't think they have a lot of a lot of oil reserves, or Singapore, Indonesia. So they need that oil to drive their cars, to drive their trucks and so forth. So they will need to pay Hafnia to get that oil over to them. So I think it's a good idea to look into. You buy it at the right price, I think you're going to do all right. All right. So Hafnia went ex-dividend yesterday. All right, no problem. And I don't invest, what was their dividend, by the way? So oh my God, 22% dividend. I don't invest based on dividend rates. And I think, dividends are easy to get our heads around. Oh, 22%, look at that dividend. But what I want is, like I showed Panel, right? Panel also paid a really nice dividend. But I want this. This is what I want. I want 284% return. You don't have to pay me a dividend. But if you make the stock go from here to there and you reward me with a 3-bagger, I am very grateful. Thank you so much, Pangea. And it was a really good investment. I got out of it. Now I'm in Zim, and I'm a happy camper with Zim. So shipping companies have been good to me. I would just tell you, see the volatility here. There's moments when you can really buy. Now, I'm not I can't tell you that I knew that, oh, this is the point. No. So I bought here, I bought here, I bought here, I bought here, but I picked, times when the market was selling it off. And that, I think that just enhanced my return and lowered my risk. So those are some comments I put out there. All right. So I found Orchid. I thought it was Orchard. Sorry about that. All right. So we covered Hafnia, Orchard, Orchid. Oh, man. We covered NVIDIA, C3.ai. Now, C3.ai has been accused of, hey, with all the AI craze, they decided, hey, let's call ourselves AI. Let's start this AI company. And I think they are growing, though. They're kind of proving their skeptics wrong. They are growing. Okay, cool. Most recent quarter, they grew by 20%. The revenue is small. And the founder of C3.ai, he's got a lot of credibility. He started Siebel Systems, which was a very successful company. I think he's a billionaire, so he kind of knows the industry quite well. So very good growth rate. And are they turning a profit, net income? No, they're losing money. Okay. How much cash are they burning? So they're burning cash on the operating cash flow level, and then they're spending money probably in their data center because they're an AI company. So they're burning about $87 million. The good news is, like, if you look at compared to 23, the burn rate has gone down. So that's good. 87 million. Balance sheet has a lot of cash. So they have plenty of cash there. How much debt? Yeah. So these guys are fine. Now, if AI works and these guys have a good product, which I have no opinion on, I don't even know what their product looks like. Maybe. What's their chart look like? Let's see here. C3.ai. Whoa. So they IPO'd and now they're selling at 85% of their high. Woohoo. Man. Wow, look at that volatility. Now this one we can explain kind of like the most recent one. Yeah, I think that the market doesn't totally believe their AI story. I mean, geez, from here to here, it's down 37%. I mean, if you study what they do and how they do it and stuff, I can understand somebody investing in it because they believe in the company. The fundamentals are not gonna give you a valuation. It's not gonna be like, oh, the free cash flow is negative, so it'd give you 0. It's like, hey, this company isn't worth anything because it doesn't drive free cash flows. So you'd have to project those and kind of use your creative process to look at their business and say, I think at some point they'll make this amount of free cash and so forth. So this one here, this is not the lane that I invest in. That's somebody else's investment, not mine. And but it looks interesting. I'll give them that. All right, Doomy Trash, NAT and GSL. Nordic American Tankers. Oil tankers. Okay, cool. So 750 million, low PE, discounted, high dividend rate. So here's a drop in revenue. Not a big deal. Let's see here. Wow. Whoa. I said not a big deal, and then I saw that they dropped 50% in the quarter. Now it is a big deal. I'd have to get that explained. I mean, you saw an idea in Orchid. I mean, no, Hafnia, excuse me. Hafnia, that one looked pretty good. This one concerns me. Like, okay, you dropped 50%. What happened? Like, did some of your ships get damaged and they're not usable? What happened? Something happened here. This isn't all just pricing. It's something affected volumes or the number of what do the shipping industry call it? Not deliveries. They use a different term. I'm not a sailor. And so net income. Okay. So you do have free cash flow. It's not high free cash flow. So 30 million. 30 million. Yeah, between this one and Hafnia, I mean, Hafnia looks pretty good to me. This one, there's some question marks that it's like you have to get those question marks answered. And their stock is down. Hafnia is down as well. I mean, if somebody forced me to spend invest $1,000 or $10,000 in one of the two, I'd put it in Hafnia, but I'm good to go. I've got Zim and I'm good to go. But that's my opinion on that guy. GSL. So Global Ship Lease. Man, we're talking shipping. Container ships, okay. Okay. So very similar. They pay a nice dividend. Market cap 848. Low PE. Sorry, I looked at the wrong line. The PE is 2.66. Wow, man. That's low. Strong buy. They're growing their business. Very good sign. Okay, good. Cash flow. Okay. 367. This one looks good. 367. This one looks interesting. It looks good. Make sure we don't have a lot of problems here with debt. Excuse me. I'm looking at the wrong document. So balance sheet, it's cash, 246. So it'll be about 475 million of net debt. Yeah. So balance sheet looks good. This one looks good. This one looks good, and this one looks good. They look interesting, and just be aware. Like, get as familiar as you can with the shipping industry. This one's up 29.88%. It's down in the current month. Okay. Because there's certain, like with Zim, shipping rates completely drive that stock. If the rates that are going to be charged to move a container of goods from China to the West Coast of the US or East Coast of the US or Europe and so forth, those rates really dropped after the supply chain issues were solved, but then they began to rise. And every time they rose, man, the stock would just rally. And then when I followed it and I tried to do the math, on based on the new shipping rates, would they be profitable? Once they had earnings announced and the earnings were positive, the stock just jumped. And that's the kind of advantage you can have in small caps, because the big hedge fund managers, they're not touching this. The market doesn't know about companies that are this small. But at the same time, you need to be aware, the market doesn't know about companies this small, so they may not even pay attention to these companies for a while. So you might be sitting on a stock for a while. So try to get as informed as you can. Try to buy at good prices, and I've had success with it. And I think because the discounts were so good, and the expectation on those shipping companies was so low that if they just did anything right, the stock would go up. So it was a good outcome for me. All right, good ideas, man. We talked a lot of shipping today. So let's take a look at the markets. Market's trying to get off the mat. It's just been punched in the face by Mike Tyson, and it's trying to get back off the mat. Still a little groggy. The punch in the face really took him out. The Russell is up a little bit. The Dow, these are 30 companies, big companies, well-known, and that's doing okay. S&P is doing okay, and then the NASDAQ is down. Wow, NVIDIA came back. It got punched by Mike Tyson in the face, and it's back. It's back, baby. Now it's going to rally up to 200. We'll see where it goes. But interesting day. I wonder if we're going to keep rallying and maybe end in the green on the NASDAQ. Right now, the S&P and the NASDAQ are a little underwater. The Dow is above, is in the green. And then the Russell is in the green. Well, spoke too soon. These things are changing quick. Man, the volatility is really high. It's 45 minutes after the market opened. All right, cool. Man, so let's just one more topic, then I'm going to shut this thing down. So down days and corrections, that's part of the game. And you really got to focus on your plan, your process, what investing discipline, philosophy, strategy you deploy, and really focus on it. Focus on the fundamentals, because The market's going to move and it's going to drive a lot of emotion, if anything, in the stories that are covered. And I wouldn't ignore it all because, ignoring it's not taking in an important variable, which is what's the momentum of the market. But it doesn't drive my behavior when it comes to my investing. I really focus on what, has made me money. Like I'm back into Qualcomm, right? It's like, okay, hey, there's nothing wrong with making money on Qualcomm on its way up. Let it come down, buy it, see it go up again. And that kind of discipline is important to be successful. So as we see these down days, it's an opportunity. It's an opportunity to buy companies at a discount, but you got to put in the time. You got to do the homework to be successful. It's not I'm going to say that if you're disciplined and it's like going to the gym. If you go to the gym regularly, you follow good instructions, you have a good program, your nutrition program's there, you're going to see the results. Investing similar. If you pick the type of investor you want to be, if you're a trader, I respect that. If you're a long-term investor, you're a little more like me. And then stick to that plan. Keep learning, keep adjusting, take information in and make the right investments. When we have downturns and corrections, especially corrections like the one we saw in 2022, the money that I invested in 2022 has been growing at very fast rates. It's great. It's a great time to invest, but it was very dark. It was very emotionally scary, I guess. There was a lot of fear in the market. There was a lot of disappointment, frustration, and that's part of the game. So I know we've only been through one day in September, but September is a bad month. It tends to have big sell-offs, and that's what it's known for. And it could extend into October, by the way. We could be in this thing for a couple months, and it could turn into something worse if like other bad news comes out. I'm not trying to scare you or anything. This is part of the game, man. It's like you're playing a football game and the weather's bad. It's raining. Well, you're not going to cancel the game. You're going to play through it. Okay. It's going to rain. It's going to rain really hard. Okay. We're going to run the ball more. We're not going to pass as much because it's going to be very hard to pass the ball. All right. You adjust and you keep moving forward. So that's what I would share with you as we deal with a very severe down day yesterday. It really caught my attention and I'm sure it caught yours. So everybody, thanks for tuning in. I really appreciate it. Really apologize for the issues I had at the beginning. You guys probably figured out that, I've been investing for more than 30 years, but a lot of this technology is new to me. Streaming is totally new to me. So I wasn't streaming a year ago. Now I'm a streamer. So I'm going to have a couple issues here or there. And I really appreciate everybody's patience with me on that. I promise to keep putting in the time and learn and get better at streaming. And I hope you got, value out of my stream. You found it interesting. Be sure to, if you want more information, I try to run the stream during the daytime and have my pre-recorded videos, out there that are, a lot of them were made. And in fact, I made one today and it's on my YouTube channel. But I encourage you, and I'm going to put it on here. I'm really active on Discord because the community of investors that, kind of focus on my channel, it's really active. Like I'm sitting on some messages I got to respond to right now. And I've got a YouTube channel out there, Victor H Investing on YouTube. There's a space between Victor H and investing. And then Facebook's not really active, and Threads is not very active. Where all the action's at is on YouTube and on Discord. If you want to join there, be great to see you on there, especially the Discord. It's pretty much active throughout the trading day and into the night. All right, everybody, let's see what happens today. And I really appreciate you tuning in. Take care.